Hi friends, in this video I'm going to show you how to choose the investment platform that you're going to use to start investing. It can be one of the decisions that stops many people even starting, so it's really important. Now if you're new to the channel, my name is Charlie. I'm an investor based here in the UK, and on this channel we're helping young and first-time investors to start their investing journey safely and successfully. Now, before you can even start investing, you need to have an investment platform. And in this video, I'm going to walk you through what is an investment platform and why do you need one. We're going to look at some of the three main criteria that you might use in order to choose your investment platform. And I'm going to show you exactly what information you will need in order to get started. So let's dive in. Firstly, let's take a look at what an investment platform is. Now, if you want to go and buy stocks or shares or funds, you can't just ring up Apple or Amazon and ask for a share in their company. You can't just ring up the New York Stock Exchange and ask them for a share in Apple. You need a broker. And a broker is an organization that helps buy and sell and manage the market for these types of equities. Now, in the olden days, a broker would be a stuffy old man that you might ring up on the phone and ask them to place trades for you. But today, it's a lot more democratized. You can buy and sell shares through a range of platforms, of apps, of websites, and that's what we're going to be looking at. Now, when I came around to choosing a platform, there were three main criteria that I used, and I'm going to walk you through that now. The first is to consider what country you live in. Now, whenever you buy stocks or shares or funds, there are tax implications, and they are individual depending on the country that you live in. So I live in the UK, and therefore I need to use an application or a platform that is affiliated and regulated within the UK. So if you go online and start Googling for investment platforms, you might come up with some that are not available in your country. So ones that are talked about a lot at the moment, things like Robinhood or Webull, they are only available if you are resident in the United States, so would not be appropriate in this country. So that's criteria number one. Make sure that the platform is available in your country. Criteria number two, I want to get into a distinction here between investing and trading, because often the two are confused and they're linked in together. Now, when I talk about investing, I'm generally talking about buying a stock or a fund and holding it for the long term so that you can see that grow over many, many years. But trading's a bit different. With trading, people try to buy a share when it's a low price, watch that go up a little bit, and then sell it at a higher price, and then use that money to then go and buy another share at a lower price and watch that rise. So they try and make their money from going up and up and up. Now, this can be quite risky, especially if you're a novice or first-time investor. You can get caught out and you can end up losing a lot of money. So generally, you want to be investing for the long term, and we talk at Kowalah School about investing in index funds to do that. Now, the reason why I mention that is that a lot of the platforms that you're going to find are aimed at trading. In fact, they've got trading in their names, free trade, trading 212, and they sell you on the promise of zero commissions. So it makes it really easy for you to buy and sell, buy and sell, buy and sell more and more and more. Now, the problem with those platforms is that they do not offer you access to the index funds that we want to get access to. They will allow you to invest in exchange traded funds, and we talk about that a little bit more in some other videos. But to get access to a traditional index fund, they will not provide that. So that's criteria number two. We need to find a platform that's going to enable us to buy the investments that we want. And then the third is to make sure that we can get our investments and our profits from those investments wrapped up in a tax a preferable wrapper. Now, in the UK, if you're an adult over the age of 18, you're talking about an ISA, an individual savings account, and that protects your profits from any income tax or any capital gains tax. If you're under the age of 18, then your parents are going to help you to set up what's called a junior ISA. Exactly the same thing. Your profits are going to be protected from any income tax or capital gains tax. Now you might think, I'm just starting, I don't have many profits, and I'm certainly not going to be above the thresholds for either capital gains or income tax, but we're in this for the long game and we're planning to grow those investments, and therefore it's best to set off in the right vein. So there are our 3 criteria for checking the platform. Number 1, is it available in the country that we live in? Number 2, does it give us access to the instruments, the equities, the funds that we want to invest in? And number 3, will it protect everything that we earn in a tax convenient wrapper? So now we've done that, let's take a look at a couple of platforms that do meet these 3 criteria. And we're going to look at Interactive Investor, and we're also going to look at Hargreaves Lansdown. Now the first that we're going to look at is called Interactive Investor, or sometimes shortened to II. It gives us access to all of the index funds that we would want, as well as a wide range of US and European stocks that we might want to invest in as well. They pitch a flat fee of $9.99 a month and make it really simple for people to invest. Within that $9.99, you can include multiple accounts. So if you have children yourself or you want multiple accounts, then you can handle them all under that $9.99 fee. And within that, you also get a free trade each month, and that can include a stock or a share or a fund. Now, the thing to think about is that when you're starting off your investing journey, you might only have invested £100 or £200, and therefore it's worth remembering that $9.99 a month is a very large percentage of that. As you grow your investments into hopefully the tens or even hundreds of thousands, then $9.99 a month is a very small percentage, but as you're starting, it's worth thinking about. Another thing to consider is that once you've used your free trade each month, you will have to pay for any further share purchases or any future fund purchases, and that comes at $7.99 for each trade that you make. Interactive Investor also comes with a really nice mobile app and a web platform, so you're going to be finding it really easy to keep informed and up to date with how your investments are tracking. The second platform that we're going to look at is called Hargreaves Lansdown, and I should say this is the platform that I use. It also gives you access to a wide range of funds, over 3,000, and we're definitely going to have access to the index funds that we want to invest in, as well as a wide range of stocks and shares and exchange traded funds, as you would expect. Now, the reason why I chose this platform was a couple of reasons. The first being that it's got a very professional mobile app that gives you some really detailed information. And you can link multiple Hargreaves Lansdown accounts together. So in our family, we have 2 adults that have ISAs, and we've got 4 children that have got junior ISAs. And I'm able to link all of those together, and with my mobile phone, I'm able to easily swipe through those and keep on top of things, which makes it really easy. When it comes to fees on the Hargreaves Lansdown platform, typically these are a percentage of the amount that you've got invested, which is very different to Interactive Investor, which, if you remember, was a flat fee of $9.99 a month. So it depends whether you've invested in shares or funds, but typically you're talking about 0.45% of the amount that you've got invested. Another important thing that distinguishes them is that on Hargreaves Lansdown, you do not pay when you're investing in most index funds. So you can invest in an S&P 500 tracker for no additional cost. This is all going to keep your fees down, which gives you more dollars, more pounds to invest in your chosen funds. So those are the 2 platforms, but really you should not panic. think of it more like going to a supermarket. The supermarket you go to today does not prevent you from going to a different supermarket tomorrow. And in fact, you could go to 2 different supermarkets in the same day. It's not like locking yourself into a bank or a mobile phone contract. So the important thing is just to pick one. Maybe you just like the name or the color. Pick it, create an account, and start investing. There's nothing to stop you switching at a later stage or creating a second account. Now, let's talk about what kind of information you're going to need in order to create your new account. First thing, you need your name and your address. And if you've moved recently, you're going to need the addresses that you've stayed at in the last 3 years. You're also going to need your national insurance number. Now, if you're an adult and you've got a job, this should be easy. It'll be on a pay slip. If you're under the age of 18, then ask your parents. They should have that recorded somewhere for you. And so now let's just take a quick look at what that looks like in order to create your Hargreaves Lansdown ISA. In this example, I'm just going to choose an adult one. We're just going to go to their services and a stocks and shares ISA. And we're going to say we want to open a stocks and shares ISA. Here's the information that we need. And we're going to open our ISA now. Now we've got our name and our date of birth and the national insurance number that we got, our nationality and our address and some contact details. The final thing that we need is some money to invest with. Now, this can either be a one-off payment of a minimum of £100 to set up your ISA, or what many people will do is to set up a regular commitment, a direct debit that comes out, anything from £25 above. Now, this is really useful because it means that you're committed and you're not going to forget about this. It's going to keep adding to your investment pot each month out of your salary or pocket money or whatever you're using to invest. Now, once you've completed that form, you're going to click Open My ISA. It's then going to ask you if you want to take that money that you've invested and put it into a specific fund or share. My recommendation right now would be just to leave it as cash in your account. We've got enough to think about today with setting up the account without then having to choose what investments we want to make. So I would just select cash for that. So there we have it. In this video, we've had a look at what an investment platform is and why we need one. We've had a look at the 3 main criteria that we need when choosing an investment platform. We need to make sure it's available in our country. We need to make sure it gives us access to the investments, the funds that we want to invest in. And we want to make sure that it's going to protect our profits in a tax wrapper like an ISA or a junior ISA. And then we've had a look at 2 of the most common platforms here in the UK, Interactive Investor and Hargreaves Lansdown. And we've seen how we go about setting up our first account. I hope that was useful. After this video is finished, get on, create your account and put some money in it, because then you're going to be able to start investing. If you don't do that, then it's just learning for learning's sake. Hope you've enjoyed the video. Please share with your friends and click to subscribe. We've got loads more good content coming up in the coming weeks. Thanks.